Good evening, everyone. This is Schofield. All right, so I'll be walking you through some trade reviews tonight. Um, so before we get started, I would just like to enjoin you on a few things. What's going on? All right, so I would like to enjoin you on a few things right now. All right, so one thing I need every one of us to understand is that as much as the quality of information you are exposing yourself to matters, all right. For instance, as much as the quality of information I'll be sharing tonight matters, it also matters it also matters the quality of your person. All right, that is for the information to produce the result it should produce in you. The quality of who you are matters. All right, the quality of who you are matters. That is the things you expose yourself to, the environment you expose yourself to, like the environment, what you see, the persons or the things you listen to, they matters, right? So as much as you're paying attention to the quality of the information that is being shared, you also need to pay attention to the quality of your person. All right, so that matters as well. So you need to understand the fact that there is a way to listen. You can listen for hearing purpose, and you can also listen to see. All right, so you need to pay attention to that aspect. All right, so let me just do a brief recap on. So let me just start off with storyline. All right, so how you build your bias and some things about entry as also. Everything I'll be sharing won't look like mirage to some persons right there. All right, so I feel like it's only fair I kick off in that aspect. All right, so you can build your biases in the you can, as a trader, there are some things you definitely need to pay attention. You need to pay attention to capital preservation. You need to pay attention to understanding capital preservation. You need to pay attention to understanding direction, that is bias. All right, so whenever you hear people talk about bias, whenever you hear them talk about direction or storyline, we are still talking about the same thing. So it's just more like using synonyms. All right, so bias, direction, storyline, they mean the same thing. They're just synonyms, and then you need to pay attention to entries as well. All right, so it's going to be funny if you're just trying to look for entries without paying attention to where price is actually going to. All right, it's just like you entering a bus, entering a vehicle, you don't know where it's headed. All right, at the end of the day, you might even get lost, and you're going to waste your time and your money. As also the same thing applies to trading. You don't know if price is going to buy or sell, but then you just want to look for entry. So that's you intentionally wasting your time and wasting your money, even wasting your effort as well. All right, so we need to. So it is reasonable for you to build your bias from the higher time frames. That is, the likes of the monthly time frame, the weekly time frame, and then the daily time frame. Right. So this is very important. Right. These time frames, right, they definitely will tell you the true direction of price. Right. So a lot of times, you won't get trapped. Right. So don't get caught up in the lower time frame because it is going to be only a comedian starts building his or her bias from the likes of 15 minutes time frame or 30 minutes time frame. All right, only a funny person does that. So you shouldn't start building your bias from the 15 minutes or 1 hour or even 2 hours time frame, because it is very important for you to understand where price is, where the direction of price from the monthly, weekly, and the daily. These guys, right, they tell you the true intention of price. And then when it comes to entries, you pay attention to the likes of H4 time frame, pay attention to H4 time frame, H1, H2. This guy right here is a very underrated time frame, H2 time frame. All right, so it makes sense to also pay attention to this guy right there. So H2 time frame, then we have the H1 time frame. All right, so this guy's right there. When it comes to entry, you need to pay attention to this one. So am I saying you cannot build your bias from the H4 time frame? Of course you can, but then you need to subject it into whatever these guys right there are saying. All right, I'm not saying you cannot build your bias from the H4 time frame, but then it has to be subjected to what these guys right there are saying, to the information you're getting from those guys, from the likes of monthly, weekly, and the daily time frame. All right, so the purpose of the month is just for you to tell you the overview of where price is likely headed. All right, this guy, right? So you can just at the start of every day, you check your weekly and the daily time frame to just follow through in this regard. All right, so yeah, so now you can build your bias using key levels and using. Please stop annotating on the screen. I don't know who this person is, but then please stop annotating on the screen. We beg you, please kindly take it off. All right, so you can build your bias using key levels, using liquidity, and using imbalance, that is fair value gap. All right, so yeah, you can build your bias using key levels, liquidity, and fair value gap, imbalance, that is imbalance. All right. Please now, who is this person again? The person with the blue ink, please take it off. The person with the yellow ink as well, please take it off. All right, please take it off. We beg you, please take it off. Please, I'm waiting. Kindly take it off, please. Yeah, then person with the yellow ink guy, please take it off as well. So in this regard, I will only be addressing building your bias using key levels and building your bias using liquidity. All right, not the fair value gap aspect. So you can build your bias using this guy, and there are factors you need to pay attention to when it comes to building your bias. The first factor you need to pay attention to when it comes to building your bias is you want to pay attention to rejection and sweep. You want to pay attention to candle closure, and lastly, you want to pay attention to break of structure. All right, so when it comes to building your bias using key levels for the stats, you're paying attention to, let us say this is a weekly time frame A-shaped level. All right, weekly A-shaped level, an A-shaped level is where you want to sell from until proven otherwise. So right there, the first thing you're paying attention to right there is that you're paying attention to candle rejection and candle closure. Right, you're paying attention to candle rejection from this A-shaped level and then candle closure. So right now, let us say, remember I've said this is a weekly A level. So now you have gotten this guy, all right, but then the fact that you have seen this rejection is not enough reason for you to, I need to be fast right now. The fact that you have gotten this rejection is not enough reason for you to want to sell. So you need to go one time frame now to validate the information you are getting. So going one time frame now, what you want to see on your one time frame now is you want to pay attention to sweep of liquidity. I mean, you want to pay attention to simply put the break of structure, that is sweep of liquidity and this break right there. All right, so you're paying attention to this, and then, or you're paying attention to a breakout. So it's either you find this on your one time frame lower. I think my network is lagging right now. There is okay. So yes, so I'm paying attention to, please pardon my network, please. So I'm paying attention to this break of structure, this breakout right there. You need to understand the fact that this is as valid as this, right? So in one time frame, you have to validate this rejection from the time frame you're building your bias on, and in this case, you're paying attention to this gap in a weekly shaped key level. You want to see a break of structure, a breakout, all right? So it is this one time frame information that validates your rejection and candle closure. And then when it comes to building bias using liquidity, so let us say we have a daily, let us say we have a candle right here. Remember when we treated liquidity, all right, so we said whenever price takes out a high, all right, so whenever it takes out a high, for instance, all right, so we need to see price target the low. And I remember I clearly said that's not enough. There are other things that needs to be considered to validate the fact that price needs to attack the opposing side. Right, so for instance, let us use a sell scenario right now. So this is a daily candle. All right, this is a daily candle. Price has taken out this daily high. All right, this is a daily candle. Price has taken out this daily high. So in this case right now, we need to this sweep. All right, this sweep and candle closure is not enough. We need to go one time frame lower. So going one time frame lower, what we want to pay attention to two things. We want to pay attention to break of structure on our H4 time frame, that is one time frame lower from the daily time frame. All right, we are paying attention to break of structure or this breakout right here. Right, so it is this guy that validates this sweep and candle closure. So remember, I said something. I said factors that need to be considered when it comes to building your bias. The first thing you're paying attention to rejection or sweep. You're paying attention to candle closure, and then you're paying attention to breakout structure or breakout. So your sweep and rejection, your rejection and sweep, you're paying attention to them on the same time frame that you are building your bias from. All right, yeah, and then you're paying attention to your candle closure on that same time frame as well. Then when it comes to breakout structure, which is the third one, you're paying attention to that on your one time frame. So it is the breakout structure breakout that validates the bias you are trying to build. All right, that is what validates it. So of course you can always go one time frame lower to other time frame lowers to just trade towards this direction that you have established. All right, so we need to understand the fact that price moves from key level to key level, and then price also delivers from liquidity to liquidity as well. All right, so in this case, whenever you have this 90% of the time price would always run to take out this low right there. I know this like I know my name. All right, so 95% of the time price would always run down to take out this opposing side, and for this one as well, price would always run out to take out either the drawn liquidity or run out to target another opposing key level. All right, so now when it comes to entries, all right, so let us say now that we have defined this direction to the downside right there, so I'll just speak as regard the H4 time frame. So I'll speak as regard the H4 time frame now, because I believe a lot of us we are intraday traders, and even if you are a swing trader, you also need to pay attention to the H4 time frame, because that is more like the intermediary. That time frame is not like an intermediary. All right, the swing trader needs it. The day traders as well, the intraday traders, we also do need it, because definitely I'm an intraday trader, of course. So now that we have a sell direction defined from what I just took off, from the chart I just took off. All right, so it makes sense for you to pay attention to this is a value level to continue your sales from. This is another value level to continue your sale from, and this is also another value level to continue selling from. All right, so from here, what do you want to do? So, we have the aggressive trader and then the conservative trader. So a conservative trader would always want to pay attention to confirmation entries, while the aggressive trader, is interested in selling from here directly. This guy is interested in selling from here directly, and then this guy is also interested in selling from here directly. All right, so for the confirmation, for the conservative trader, he wants to pay attention to confirmation. All right, wants to pay attention to confirmation. So I'll just so let me just so the following are the kind of confirmations you can always pay attention to. All right, the fact that yes, you have this guy on your H4 time frame, right? So the confirmations I'll be drawing out right now, you can pay attention to them on your H2, H1, M30 time frame, just to ensure you're in alignment with the defined direction, with the direction you've already defined from your weekly and the daily from the previously shared screen. All right, so right there this is one of the confirmations you can pay attention to on your H1, for instance. All right, on your H1, H2, M30, for instance, whereby you expect price to come back into this level, and right there you want to sell with your stop loss slightly above this guy. And of course, yes, you might want to use this guy as a confirmation as your entry, but then this is a lower time frame confirmation. A lot of times price might just run from it without even coming back into this one. And since it's a confirmation entry, it means from here to your stop loss should a lot of times would be less than 10 pips stop loss. So what is the point in using this extreme when price can run from it, and when you have a reasonable stop loss rate that is less than 10 pips stop loss? So yes, so the second kind of confirmation you can pay attention to in this regard is that's where price takes out a previous candle high. All right, so we have this high right there. So we have this price takes out this high right there as well. All right, this has been taken out. So this guy is going to present for you a fresh and clean A-shaped level. So you want to sell from this guy. and put in your stop loss by this place. All right, so that is the second kind of confirmation you can pay attention to. And then the third is the engulfing. All right, third is the engulfing, whereby you have two consecutive bullish candles to the upside, only for price to take this out. I mentioned this kind of confirmation entry on the key level video, where I said, right, I just want to pay attention to selling from this guy with your stop loss above the wick this guy's going to give you. All right, and also there is a way you can even incorporate this into this and this. Thank God, Ben, please take out your markup. All right, in such a way that whenever you find this one on your H2 or your H1, you are going to have this on your immediate time frame lower, and you are going to have this on the time frame lower than this. For instance, if you have this on H2, this guy on H2, all right, if you have this on H2, you are going to have this one right here on H1, and then you are going to have this one on M30. All right, so you are going to have this one on M30. So if you have this on H1, you are going to have this on M30. You are going to have this on M15. All right, so I mean, you can also pay attention to them individually, whereby you just want to pay attention to either this or this. All right, so it means as a confirmation entry trader, as a conservative trader. All right, as a conservative trader. So as a conservative entry trader, as a confirmation trader, all right, so you want to pay attention to either of these confirmation entries around here or here. So it means that if you don't find any of these confirmations here, you can find them. If you don't find them, you can find them here. All right, so which means when an aggressive trader has lost money here, you have not seen your confirmation, which means your money is still intact. An aggressive trader loses money here, your money is still intact. And then an aggressive trader enters from here, price goes this way, but then you find your confirmation, then you enter. You have not lost anything, but then that gas lost. I mean, he has lost 2 hours already. So these are the kind of confirmations you can always pay attention to. All right, so I'll be starting my recap of the first trade I took on Monday. So I'll just be talking about only about 3 or 2. So I'll be breaking about 3 or 2 right now. All right, so we are going to be talking about my growth network. Oh boy. I don't know, man. All right, so this is USDJPY. All right, so this is USDJPY. So let us pay attention to what we have from the monthly time frame. All right, so as at last Monday, price has not taken this guy out. All right, so and the moment we have, that means we have a most recent break to the upside on the monthly time frame. Like I said earlier, monthly time frame, it gives you an overview of where price is most likely headed. All right, so from that moment, it is just a no-brainer to realize that price is heading for this guy. All right, so we can tell that monthly is bullish. All right, monthly is bullish. As well, couple the fact that we can tell that I think December candle rejected off this key level, and then of course price should get there. right? So monthly bullish, right? So I've been able to establish that already. That has been established already. So now we need to go to the weekly time frame to also ensure that weekly time frame is, is in alignment with what we have on the monthly time frame. So going into the weekly time frame now, we can I don't know why this thing is so poor tonight. It's just pardon me, please. All right, so on the weekly time frame, we can tell. All right, so let me so this was the target we have from that monthly time frame. This high was that target. So on the weekly time frame, we can also pay attention to the fact that, or you can also pay attention to the fact that weekly time frame is also bullish. All right, weekly time frame is also bullish because we closed above this guy. All right, so yeah, they closed above this guy. That is a breakout. All right, so now going into now we can tell that monthly and weekly are in alignment. All right, so which means it makes sense for us to pay attention to buying opportunities for the expansion. All right, until price gets into this high. So going into the daily time frame as well. Let us also see what you can pay attention to from the daily time frame to see if the daily time frame is also in alignment with what we have on the weekly and the monthly time frame. So now, seeing what we have on the daily time frame, we can tell that as that this was Monday, all right? So which means price closed above this one, all right? Price closed above this on Friday. So now it means we are coming into the chart on this candle, right? So this guy that rejected off this guy. Right, so it makes sense for us to definitely pay attention to buying opportunities, right? So paying attention to what we have on, let's also have on the H4 time frame. So on the H4 time frame, we can, oh my God, this network is really disturbing my train of thoughts. All right, on the H4 time frame, you can as well see the fact that H4 also broke structure to the upside. All right, H4 also broke structure to the upside. So right there, we can tell that now monthly, weekly, daily H4, they are all in alignment. So it makes sense for us to just pay attention to the range formation that is towards that direction. And when I talk about range formation, I am trying to talk about, say, sweep and break off structure to that direction. All right, let me take this off very quickly. All right, so it means for us to pay attention to a range structure formation from this level. All right, so from here now we can tell that H4, this is an H4 level. So if you want to have a kind of aggressive entry from that guy, you can just pay attention to a structure that is in alignment with that particular and established direction. So on H1 time frame, this is an entry you are going to have. You can see that just what I just drew, that's what you have on H1. That is, you have your sweep of liquidity and break of structure to that established direction. Right. So from here, of course, you can, it makes sense for you to enter from maybe from this level, whatever level you prefer. Right. So I entered, I had my first entry from here. You can see we have a sweep break of structure, internal liquidity, external liquidity still standing, of course. So first entry, right, targeting this one. All right, and then I think this happened in the midnight. What time was this? This happened around 1 a.m. Nigerian time. So let us go back into that H4 time frame just to pay attention to a confirmation entry from that point. So going back to the H4 time frame, just in case you were not awake when this guy happened. All right, so oh my goodness. An H4 directed of this guy, right? So it makes sense for us to possibly pay attention to function trade. And what we have right here is that we have an H4 that rejected of this A level on H4 with H4 that engulfed. I always tell my guys in the inner circle, whenever you find an H4 engulfing, automatically it means you have your H1 break or structure to the upside already. That's why you have H4 that has engulfed. You have an H1 that has broken structure to the upside. So let's confirm this. So you have H4 that has engulfed. So going into lower time frame now, for instance, I'm really struggling with this network.
On YouTube.
All right, thank you. All right, so let me just make a recap from where I kind of stopped. All right, so I said we have this H4 that rejected of this guy, and this guy engulfed. All right, so it means even from this H4 time frame right here. So I'll try to be as fast as I can right now. From this H4 right here, you can decide to either enter from this open close level or from the V level right here. All right, so H4 that has rejected. So now let us mark out this V level that we have since automatically been over. Lower time frame has given us a kind of confirmation from here. So on the H2 time frame, what do we have? We have this is a V level directly. All right, we have a V level right here, and you can see a confirmation we have from here is that instead of you just entering from here and just having a big stop loss that is from this level right here to this low, you can just pay attention to the confirmation I just shared. That is the sweep of this low. The sweep of this low while the high is still standing. I'm not sure I added that earlier. So what makes that high, that low that has been taken out valid is that the high must still be standing. This makes it kind of valid. All right, so now you have a low that has been taken out, the high is still standing. Of course, you can tell that it's presented for us a V level. All right, like I mentioned earlier. So in this situation right now, you want to pay attention to entering from here, and then you target whatever level you want to target. All right, but then now let us say we have this level right now. You might even decide to possibly refine it into a lower time frame. All right, you might decide to refine it into a lower time frame. So now refining it into a lower time frame means you are coming into a H1, which makes this guy my entry. All right, so you are paying attention to what we have on this H1 right here. You have a V level. All right, this is a level right there. You can tell that it had internal liquidity. All right, it had internal liquidity resting above it, and your entry right there, your stop loss right here, you can target wherever you want to target. All right, and then if you still needed a more solid confirmation, you can tell that we had H1 rejection, H1 that rejected of this guy, and then H1 eventually broke structure to the upside right there. We had a break right. Let me just put it. We have a break right there. All right, so from here I want to pay attention entering by this open close. All right, remember this is another confirmation entry I showed the other time. Bearish candle, raise for a bearish open close key level. Price violated it. I mentioned something on the key levels video. I said price does not, to make your listing valid, price needs to either sweep liquidity, break structure, have liquidity above or below, and those stuff. Right, you can see this guy swept liquidity, broke structure, so it does not have internal liquidity, but that's because it is. There are some times when you are paying attention to confirmation entries, they don't sometimes have internal liquidity, but then your direction is already established. All right, so you just want to enter from here, just stop loss, this becomes a validation low. All right, so entry from here, another entry from here, and then boom boom boom, price rounds to your target at the end of the day. All right, so let us talk about USD. Let's start off with GBPUSD, then we finish it up on USDCAD or USDCHF. Let's see. All right, so this is GBPUSD. All right, from the previous months, I've been posting some things about price taking out this low. You remember from the liquidity call, we said whenever price takes out a low based on one or two more, right, you expect price to take out your opposing side. And whenever price takes out your external, this makes this guy your internal, and then this guy your external. Whenever price takes out your external, all right, you want to expect some sort of reversals, or should I say retracements? As you want to expect some sort of some sort of reversals. So right, the price has taken out this guy. So let us follow through on the So let us follow through on the weekly time frame now. All right, so on the weekly time frame, you can see price has gotten into this target on the monthly time frame. So let us see what we have on the weekly time frame. So on the weekly time frame, what we have right there is also that price has taken out this external. All right, and then if you pay attention to the information we have on this weekly time frame, you would realize you have a clear sell setup that is in alignment to the fact that price has taken out the external liquidity on the monthly time frame. What do I mean? You can see we have the sweep of this liquidity right there, and then we have this internal liquidity that is resting below this A-shaped level. Remember, an A-shaped level is where you want to sell from until proven otherwise. So now we have a weekly candle that has rejected off this guy. And long term, I would say I'm expecting GBPUSD to end up taking out this low. All right, long term, I'm expecting this guy to get busted. So now we have a weekly that has rejected off a weekly key level. Remember what we started with. All right, weekly candle that has rejected off a weekly key level. So you need to validate it on your one time frame lower. So now the one time frame, I can tell that we have a sweep and break of structure. All right, basically we have a break of structure on the daily time frame. That is, we have the sweep of this guy, and then we have this break of structure right there. All right, this is a swing. I mean, a swing low that this right here is a swing low that price violated. All right, this is a swing low that price violated. We said higher lows can be used as internal liquidity or structural points, and in this case, price violated our higher low. So it means price has used this guy as a structural point from this point. So we can just pay attention to selling opportunities now, because now it means our daily time frame is now in alignment with our weekly and the monthly. All right, also on the daily time frame, you can see that price is rejecting off this one. All right, aside this, you can as well see that price has also taken out the previous daily high. So this means you can build your bias with you can build your bias storyline or direction with a combination of liquidity and key levels. All right, so and the same thing validates them, just like what we started with. So now we have a daily high that has been taken out. This is an intel for us to expect price to take out this one, but then this sweep is not enough for us to know price is going to get there. Right, we need to go one time frame now to validate this sweep and this candle rejection. So paying attention to what we have on our lower time frame, we are paying attention to a break of structure or a breakout on our H4 time frame. All right, so now what do we have right here? You can see now that we have this breakout right here on our H4 time frame. All right, so it means this guy is now in alignment with what we have on the daily, weekly, monthly. All right, you can see we are not doing anything that is opposing the information we have discovered. So right now, it makes sense for us to pay attention. It makes sense for us to now pay attention to selling opportunities. All right, so daily has giving us a sweep. H4 has validated that direction for us. So now it makes sense for us to now trade towards that established direction. Right, so now we can still build your bias from here again. You have H4 that has rejected. And so you can just follow through on the likes of, if you don't want to enter aggressively, right, you can just follow through on the likes of your H2 time frame. Remember what we did earlier. All right, so the price gave us a breakout right there, which is in alignment with that H4 that has rejected, and now we have this breakout on H2 time frame. So it makes sense for you to actually enter from this guy. All right, this guy can be your entry. So right there, you want to enter from a level like this with your stop loss around your, this is your, at the end of the day, this is your invalidation zone. You need to pay attention to this fact as well. So there are a few logic to stop loss placement in a situation like this though. All right, so let us see what we have on H1 just to ensure we are on the right path. All right, so the H2 is clean. H2 has, this guy has a lot of candles right there. So let us just stick to what we have on the H1 time frame. So this is just how you simplify these things for yourself. All right, this is how you end up simplifying these things for yourself. So right here as well, you can also see that H2 also broke structure to the downside. So you can see how everything keeps screaming sales. All right, everything keeps screaming sales. And right there, we can, you can decide to enter from, because at the end of the day, a lot of persons have this guy as liquidity, but we need to understand, we need to get used to the fact that the market has a mind of its own. So as much as you have your expectation, the market also has what it is going to do. So it is your understanding of your technical, all right, that gives you your upper hand amidst whatever price is going to do. Right, because it is hard enough to know what the market is going to do, and if you don't know what you are going to do, the game is lost already. So which means you need to know the market has what it's, the market is always going to do whatever it wants to do, regardless of your bias, regardless of your expectation, right? So which means you also need to know what you're going to do. You need to make room for flexibility, right? Yes, this place is a valid level to pay attention to as internal liquidity. I want to sell for him, but then the market said, "Oh no, we have other plans." At the end of the day, price ended up selling from this guy. Price ended up selling from this guy, right? And if you should go to other lower time frames, H1, this is what we have on H1. I think M15 has something that looks interesting. So M15 has this sweep and break of structure for us. So price ended up selling from this guy on M15. At the end of the day, even if you didn't enter from that guy directly, based on the fact that you were kind of skeptical, all right, what the price again? Price presented for you one of the confirmations I showed earlier. That is this one. All right, you can see we had a sweep and break of structure right there. So it means, of course, it is reasonable for you not to enter from it because we're skeptical. I mean, will price, take this out, or will price react from this one? At the end of the day, price gave us a confirmation that this price, gave us this guy. And at the end of the day, you can see what price did again. Price presented this sweep of liquidity and break of structure for us. And if you were waiting for this A shape that was validated twice or QM right now, you will have to be waiting until now. But then price moved from the breakout level and it sold off. So this was what happened for the Thursday expansion I posted about, right? So this is your entry, stop loss right above this guy. So sometimes you just have to trust what you know, all right? Because at the end of the day, it's impossible to know the best way forward. Sometimes, in fact, a lot of times you wouldn't. You just have to do what you have to do and expect them to give you the outcome. All right, so that is that as regard GBPUSD sales. Let me check something now. So I posted. I mentioned it. I said this is that level on the weekly time frame where I'm expecting price to take out at the end of the day. All right, now we have daily that has given us a breakout, so it is very possible for price to. Now this is as regard my expectation for the new week or for the coming weeks, right? So now we have price has rejected of this guy, right? So it means we have a daily that has rejected of a daily time frame of a daily key level. So we also need to pay attention to this guy as well, because they might end up using this one as internal liquidity to end up running off from this level, from this level, right, for the next or the incoming weeks. So we can pay attention to this. And at the end of the day, if price at the end of the day doesn't come back here, it makes sense to also pay attention to this one. So it is safer. It is safe to just work with confirmation entries. All right. So we can. All right. So one thing I would also like to chip in is it is for those that trade this guy as patterns, all right, you need to be very careful, because a lot of times, if you are trading this guy without the proper logic or without understanding the price direction, you are going to be liquidated every time. Right? You can see this is a very clear level to. That means some people would feel like, oh, this is a QM level. Scofield loves to trade from levels like this, but you need to understand the fact that this is against the overall trend, because we are bearish. Now we can see we have this guy that has rejected. So if price is going to run off from that most recent daily rejection, all right, so we can pay attention to it. Makes sense for us to pay attention to selling from here, all right, and your stop loss above here. So as much as yes, we are expecting something above, but then so in this case right now, you can just pay attention to possible confirmation entries from here. So that's regard my expectation on GBPUSD. So lastly, let us talk about I think I posted the USDCHF setup as well. Yes, I believe. All right, so for USDCHF, let us start from the weekly time frame. So the weekly time frame of USDCHF says bearish, right? So this weekly guy says bearish, right? Because we can see we have the most recent break to the downside, and then from the big picture, we can see that price keeps giving us lower lower high, and all of that. All right. So right there, we can see that price broke its most recent structure to the downside. So it means we can pay attention to. It means we can pay attention to some buying opportunities, right? From when we had this guy, right? You can pay attention to some buying opportunities. And the buy opportunities you're paying attention to, you need to understand the fact that they are reversals. All right, so they are reversals. They are just for price to balance itself. And all right, so I'll come back to that. So as regard that, we can see that on the daily time frame is presenting for us on bullish setups high to this low, lower high, lower low, and then we have what break above our lower high. So it means price use this guy as structural point, break of structure. All right, so basically price using your structural point as in your lower high as a structural point, or your lower high, or your higher as a structural point simply means price breaking structure. All right, so now we have daily rejections of this guy. So you can see this guy has been tested severally, 1, 2, 3, and then it overlaps inside of this imbalance, right? So it makes sense for us to pay attention to this and expecting price to, of course, get into our target right there, the breakout level on the weekly time frame. So now we have a daily rejection, and going into the H4 time frame, it also makes sense because you can as well see that this is also a valid level on the H4 time frame, right? So as much as it is a daily level, it is also an H4 level. All right, so it has also been tested severally. So we can see we have several H4 rejections. So from here now we can pay attention to bullish setups, right? Bullish entry opportunities. So on the H2 time frame, we can pay attention to a confirmation entry I mentioned from start as well. We can see price took out this low while the high was still standing at that moment. Right, price took out this low, the high is still standing, and it means your stop loss should be around here. Your stop loss should be around here. So from here now it means this becomes your entry. So you're entering from here. All right, you can see we have like I mentioned, you are going to have a V level that is seated right there. So right there is our entry, and then you want to trade towards this one right there. So right there is your entry. All right, entry right there, and then boom, your target got hit. All right, target got hit. Entry right there. You can see price came lower but didn't take out this invalidation level. So this is your invalidation level. So you can as well see that we have a very beautiful we had a very beautiful this guy right there, sweep and break of structure. But then you can see there is no reason why you should even be selling from it, because number one, this is an external level for the buy that is coming from that level. All right, and so you selling from it, one thing is price would always show you what you want to see. And see price gave you that rejection, oh, you were happy, damn, my trade is going well, price has engulfed. Now I can sell. Now you started stacking some more interest only for price to end up busting you out. All right, so yeah, so that as regard that's USDCHF guy. So let us see what I'm possibly expecting on this guy. Currently we have this one. We have this guy that has rejected of this one. So personally, I feel like I would love to. This guy might end up getting into this level, so I want to. And at the end of the day, this should get taken out as well. So this is basically just me paying attention to this guy as a trade zone. Right, that is a level that can oppose price getting into this level. So on the daily time frame, you can see we have a daily that has rejected off a daily level as well. Right, so because you can see that we have a daily reject daily right there. Let us see if we have H4 alignment. So the H4 alignment we have currently is this H4 engulfing, and I mentioned H4 engulfing means you have an H1 break to the upside. So let us validate that. So yes, sir. We have our H1 that has engulfed towards that guy, so possibly we can pay attention to if you take a loss on this guy, so possibly, all right, so let's go price was around this level. And then I think lastly, let us check out USD CAD, and so for the USD CAD, so let us see what we have on the weekly. So the weekly time frame looks bullish because we had a most recent break to the upside. Most recent break to the upside. But then the monthly looks bearish. All right, the monthly looks bearish because monthly this thing to the downside. Most recent break to the downside. All right, so monthly looks bearish, but then weekly started a bullish this thing already. Weekly became bullish. So let us check what price actually did from that moment. So from that point, price. So one thing I've been telling the guys in the inner circle is that the fact that say you were bidding your bars from the from a V level now. So since we are buying here, so you have your weekly rejection, all right? Of course, you need your daily breakout structure, breakout to validate it, all right? You need to understand the fact that the primary purpose of this breakout structure breakout is for it to validate your direction. It means sometimes price wouldn't even come back there to continue buying. So the primary purpose, the job of this breakout structure breakout is to validate your direction for you. All right. So just in case you feel like, oh, price didn't come back to take me out, that means so you were not just flexible enough. All right. The primary purpose of this guy is to validate your direction for you. So it means sometimes price would move from a level like this and continue buying without even coming back into this one. So you need to be you need to make room for flexibility. All right. So it means if price does not come here, position yourself. If price comes there, find a way to position yourself. All right, the most important thing is that this guy has defined it has validated your direction for you. So that is that. So now weekly time frame became bullish. All right. So on this daily time frame, let us see what we have right now. So remember, weekly time frame is bullish, and now we can pay attention to the fact that daily time frame also became bullish. Why? Because so daily time frame became bullish because we had a breakout structure, right? Price came back into this level. All right, price came back into this level. We can also see that price took out previous daily low, thereby rejected of this key level, right? So that is definitely a key for you to know that this low has been taken out. This high is next. So this means it is an intel for you to know that price won't come back here, or even this one. So you just need to prepare yourself. All right, you need to be aware. So daily time frame has done this gap. Daily time frame has taken out this this daily low right here, and then we mentioned that this guy was the overall target. All right, was the overall target. So going into the H4 time frame, what do we have on the H4 time frame? The H4 time frame presented for us. Here's the card, right? So H4 time frame presented for us. Which day was this? Wednesday. So on the H4 time frame, where is Wednesday? So on the H4 time frame, we oh yeah, so I was wondering. So on the H4 time frame, we had the break of structure to the upside. The previous daily low taking our break of structure to the upside. So it means it makes sense for us to pay attention to buying from this V level. All right. So it means this can be your entry while you just keep your targets at this level. So let us see if you possibly want to still pay attention to a confirmation entry. All right. So let us say you want to pay attention to confirmation entry of this guy. So now it means you have several H4 rejections. Let us see what you have on the H2 first. So yes, so H2 has one of the confirmations I also mentioned earlier. I think I'm sharing too much. One of my guys just texted. So we have your sweep of liquidity break of structure right there. So it means it makes sense for you to pay attention to entering by this level. All right, entering, I mean breakout level, this one or this one. But if you are not strong, if you decide to use this extreme level at the end of the day, you mentioned that the price has a mind of its own. And if you don't have a mind of your own, if you don't know what you are going to do, the game is lost. All right, so because logically I did use this guy. All right, so I'm just talking about my perspective as regard the trades I took. Now remember, so I used this V that was validated 2 times, right? So right there, entry right there, stop loss around somewhere around there, and then targets it from here, and then coming back the next day, on Friday, then one thing we need to pay attention to the fact that yes, this previous high was taken out, that is this red candle I was taken out, but then price did not still take out the overall external. So pay attention to the fact that daily has a breakout. So it means this was an intel for us that we should still buy the next day, that is Friday. So come back to your H4 time frame. What can you pay attention to? What can you pay attention to on your H4 time frame? So this is our external. So I'm taking it out. This is our external, right? All right, this is our external, right there. And now we have H4 that gives us a sweep and break of structure. Sweep right here, break of structure right there. and then it makes sense for you to now pay attention to, yes, this was my entry for Friday. All right, yes, you would have other levels below. Remember, I mentioned something in the key levels video. It makes sense for you to pay attention to this one first before the other levels below, because a lot of times price would just run from here directly without even coming back here. But then if you decide to use either this or these levels below, you are not wrong. All right, price just start with our plans. All right, and choose not to take you along with its plans. So entry right here, stop loss, somehow around a level below. Like I said, there are some logic to setting stop loss. All right, so let us say now we want to pay attention to possible confirmations from these guys. They were skeptical. Will price use this? Will price use this? Will price use this? Let us see from the H4 rejection that we have right here. So this is our H2 time frame. So at the end of the day, we did not. You can see we have lower low, lower high, lower low, lower high, lower low right there. So it means this is the level that possibly confirms the confirmation, that possibly presents our confirmation, and you can see an E level that price violated, price broke above it. So it means now it makes sense for me to now enter the bus, the promised land. That is, you look for your entry towards your target level, so you can decide to enter from whatever levels you prefer around there. I mean, let us see what we have on H1. Although, yeah, so now on H1 I feel like, there is, although this I didn't participate in this guy, but then on H1 I feel like, now it makes sense for me to enter from here. Why? Because price literally swept this guy and broke structure. All right, so price swept this, and you can see it has several taps. So of course you can have your so it means you can, sorry, network no grip put this position to make one of X. So you can have your entry right here, and of course if your stop loss is here, it's not even still bad, right? This should give you about 1 to 3, and that'll be your money. So this should give you a solid 1 to 3. So let us say we have 7.5 pips stop loss right there. All right, so 7.5 pips stop loss right there, and so this target gives us about a solid 1 to 3. So this is data regard what we have on this USD card. All right, I think pretty much that is going to be all for now. So what else? Yeah, so I mean, yes, I'll just stop recording from here. Thank you guys for tuning in. Thank you for tuning in.
Boss, please, you took a trade on AUDUSD. Can you review it, please? Oh, the time is up already.
Yeah, the time is. I mean, I wish I could, right? I wish I could.
All right.
Simply
No
put,
problem.
on the AUDUSD. On the USD, let me see. I stopped recording already anyways. Let me just. So let us see what we have on USD. Oh my God. Time to low. So so yes, on AUDUSD. I'm on the right pair. Oh yeah, so am I? So 1 second, please. I'm just trying to. All right, so this guy monthly is bullish. All right, on this guy monthly is bullish, and then on the weekly time frame is also bullish. So this justifies the fact that this was just a kind of retracement sale. All right, it's a sort of retracement sale. So the price took out this guy. Price took out the weekly high, and then price is here to target this low. All right, I mean, price took out this high now, so if I don't tag it, you should please be able to understand. Price took out this high, then to validate this high, so that's weekly high sweep, you need to pay attention to break of structure, a breakout to the downside, and price did give us a breakout to the downside, which is this one right there. So yeah, so it means it makes sense for us to now pay attention to certain opportunities. All right, so yeah, you can pay attention to this one, but then price didn't come in, so let us pay attention to what price did on the H4 time frame. So on the H4 time frame, we can see that if you've been following through and if you understand the logic I've always been trying to pass across, we have a sweep of this high, and then we have this guy becomes our internal liquidity now. Sweep of this guy, we have our break right there. Right, this guy becomes our break, and we have internal liquidity. So this becomes the external. Price has not taken this guy being the external out, and then we have our weekly low right here. So yes, I'm still expecting price to run into this external and then take out the weekly low right here. So right now we have a proper sweep of liquidity, internal liquidity and external still standing. So our daily high was, daily A level was around there. So I just walked around this H4 level, but then I did not enter aggressively. So let us check the confirmations I did use. One of the confirmations I used, the confirmation I did use was that so the confirmation I did use was that you can see we have this sweep and break of structure, whatever right there. Right, but then I feel like I wasn't just interested in buying. I just started to follow my instinct. And one thing I did do from here is that this eye was taken out. This eye was at the point of my entry, right? This eye was taken out. The low was still standing at that point, all right. The low was still standing. So I just had my entry right at this level. I had my entry at this level. And sometimes you shouldn't fade the place of conviction. So some I just felt like, oh, Schofield puts your entry by the actual this thing. So I just had my entry here, my stop loss here instead of this one. I don't know why I did that, because if this should be my logical entry based on the confirmation entry logic, all right. So I just start to put my entry here instead of this one, and at the end of the price would have taken me out right there, and my stop loss was there. So entry just everything went as planned. So you need to pay attention to the fact that about what you have right there. If for instance let's say your daily is bullish, all right, you've validated the bearish direction on the daily time frame, and then your H1 or H2 after price started rejecting from me. So let me even say price has not even gotten here yet now. I'm trying to take this one out. So price is still, dancing around here. And of course, that right there, you should get some sort of downside move. All right. So right here, you should get some sort of downside move right there. So if now you come to your lower time frame and you still have something like this on your lower time frame, say your H2 or H1, you have something like this on your lower time frame, you need to be careful, right? Because overall it's bearish, right? And price is now around a level that should breath some sales. So if you ever enter from it based on the fact that there is sweep and break right there now, let me just enter. You're not attaching logic, you're only just trading this guy as pattern. So you need to pay attention to the fact that price is most likely going to take you out, especially with what you have right there. All right, price will always show you what you want to see now. Price rejected from here, give you this one. Let's say you want to buy, and for price to end up taking you out right there. So this will happen at the end of the day, and price will just come back and then go towards its intended direction. But in this case now, we can see that price never came back for the possible confirmation entry that is somewhere like this. All right, price never came back. So the fact that you have a confirmation entry again does not mean price is going to come back there. So you need to pay attention to that as well. So I think my job is done here for today. So see you guys when I see you. Bye bye.
Thanks, boss.
$7 billion.
Everywhere good.
W in the fucking chat.
Yeah, W's. Bye bye.
Booyah. Thank you for the class of Schofield.